And I think we're ready to go. So welcome again to our post-election year-end financial planning webinar. And as DJ shared, happy Veterans Day. We first want to say thank you to our men and women who have served our nation in the past, in the present, and in the future. And our goal today is to, provide education, talk about some, all things post-election here, what we know today. And we're gonna do that. And DJ is joining us. He's gonna specifically talk to us about the market updates. And then I will be coming back and to discuss the year-end planning and some tax and charitable ideas. And then at the end, we'll leave some time for question and answers. And so as you have questions, please feel free to put them in the chat or in the Q&A. We will, some of them we may try to answer as we go through our presentation, but if we don't get to yours, then we will be staying here at the end to get all of those questions answered. So today, again, I am Julia Carlson. I'm the CEO and founder here at Financial Freedom Wealth Management Group. And I have the pleasure of having DJ Wright join me. He is our portfolio manager here at Financial Freedom Wealth Management Group and a wealth advisor. Welcome, DJ.
Hello, thanks for having me.
Yes, DJ's been on our team for over 5 years, and he lives in Eugene. He went to the University of Oregon and is just has a really great skill for this business. And I often say, boys, a lot of the stuff that happens, it reminds me of me, 20 years ago, just to understand the investments and how it all works and putting things together. So it's really great to have him stepping into this portfolio management position here to help us find really the best investments for our clients.
Absolutely. Well, it's been a great 5 years, Julia. So thank you. And for teaching me your ways. I know you've been doing this for over 20 years now. So she is the founder and CEO of Financial Freedom. She's got her investment advisor representative with LPL. She's got her Series 24, her 63, her 66, her Series 7, all kinds of things.
All those numbers.
Going. And life and health insurance. And yeah, 12 years we've been part of the Dave Ramsey Smart Investor Program.
Yeah, excellent. Well, thank you, DJ. Okay, I also want to say welcome to guests that are joining us today from the Samaritan Foundations. Samaritan Foundation encompasses the 5 local foundations in the communities. That's Samaritan Health Services, which are our local hospitals here in rural Oregon. I serve as a treasurer on the Pacific Communities Health District here in Newport, Oregon. And it's a foundation that we support as part of Financial Freedom Wealth Management Group, as part of our giving back to the communities that we serve. And we really believe in the mission to positively impact the health and well-being of the communities they serve by engaging philanthropic partners to support the local hospitals. So Samaritan Health Services is a nonprofit as well. And so I just really like giving back to an organization that, helps us all build healthier communities. So welcome and thank you for being a part of this today. A little bit about Financial Freedom Wealth Management Group. We were founded in 2000. We're an independent wealth management firm, and we provide customized solutions to individuals, families, businesses, as well as executives. We serve clients now in over 30 states. We have a team of 15, and we're hiring 3 more now, so we're growing rapidly. We have 6 physical locations in Oregon, but again, we are expanding nationally. This is our wonderful team. And so we have 6 wealth advisors as well as 9 support staff. And our commitment is to care deeply about you and your financial life. And so with that, let's launch into this. So I think that we are all relieved, as well as we're seeing this relief rally in the market, that this election is over. And here's what we know. Americans showed up to vote in one of the largest turnouts ever. And it was a lot closer than the polls suggested. The results were a lot closer than we thought. And it shows, I believe, that Americans voted for balance, for stability. And the other thing is we didn't see a stock market crash, going through all of this. So I think that as Americans, we see a desire for checks and balances. And I believe that this is a good thing for our nation. So what we know now is Joe Biden is president-elect and Kamala Harris is our VP-elect. And what we also know is that there are still a large number of Americans that still can't say the words President Biden-elect. So we don't know how all this plays out. We pray peacefully, but this will create volatility, no doubt, in the coming months. We also most likely know that Republicans are now likely to hang on to the majority in the Senate, resulting in a split Congress for at least the next 2 years. A split Congress acts as a system of checks and balances between the two parties, which means that the extremes will not play out here. We will know this for sure in January after the Georgia runoffs, but it's about a 60-70% chance that Republicans will maintain control of the Senate. But even if it was 50-50, it would still make these extreme changes hard to get passed. So they call this gridlock in Washington, and historically, gridlock is good for stocks. So DJ is going to touch on this more in the market outlook section. But the bottom line, we feel, is that it takes out the extremes and leaves us more with a status quo, which for the markets is not bad. Moreover, some of the potentially more expensive Democratic initiatives like climate change legislation, healthcare reform, and a rollback of the Trump corporate tax cuts, for example, now appear much less likely to pass in the near term, offering some relief to investors who were expecting a less business-friendly environment. And Biden also has the experience in working in Washington, in negotiating bills, and in politics. And so, this may show up in, the relationship with China and tariffs. I know DJ is going to go into that as well. So we won't see, we believe it, not a huge stimulus that we would have seen in a blue wave situation, but most likely we will get something. Senate Majority Leader Mitch McConnell said, this is the first item we are going to focus on, which is to get another stimulus package passed. Here's also what we know. 4 years ago, people weren't happy with the decision. And what we know today are people are not happy with the decision. So we have to, it is what it is. We are going to move on. We're Americans, we're resilient, and we don't invest in presidents. We invest in publicly traded companies. And so we have to learn how to disconnect our emotions from our investing decisions. Easier said than done, I know this, but I think the more that we can get educated and the more that we can learn, the more that we'll be able to make those better decisions. So with that, I am going to turn it over to DJ to give us a market update.
Well, and that was really great, Julia. That really was. And I think with politics, right, it's give a little, take a little. We can't always be 100% happy. But let's talk about the market. So there's lots going on with the election and the COVID pandemic and all that. So what does it mean for your investments? Well, First, I want to focus on this right here. Whether you're happy or sad about, the outcome, bottom line is presidents come and go, and long term, stocks don't really care who's in the White House. We designed our political system for that with limited power, right? President can't just come and change everything. There's checks and balances. And history shows us that whether it's blue, red, the stock market keeps going up, and it's averaged about 10% per year over the last almost 100 years. So again, like Julia mentioned, we invest in companies and thousands of them all over the world, not presidents. And go ahead and go to the next slide. Thank you. So let's talk about the COVID pandemic. So first of all, we aren't out of the woods yet. We all know that, cases are rising. We're getting into the winter months. But with that said, there's a lot to be positive about. The big one, the new release this week, was the Pfizer vaccine, showing very, looking to be promising. They're saying it's about 90% effective. And the market reacted pretty well for that, from that news. The last week and a half, we've had a pretty incredible run. And that was a big piece of it, that we're looking like we're making moves and we could find that vaccine. The markets are always looking about a year ahead. So with that news, they're saying, okay, a year from now, we'll probably have a vaccine, and we'll be in a much better place. Also earnings, right? We're in earnings season for Q3, the third quarter, and they're coming out much, much better than expected. So we're on track. There's still a few companies to report, but we're on track to fall about 7.5% from 2019 Q3. Now, I know that's still a decline, but it's more than 13% above what we were expecting. We were expecting more like a 20% decline. So that's huge in the stock market. If you beat expectations, market loves that. So that's some good news. And then let's talk about the split Congress here that Julia kind of alluded to there. So it's not for sure yet, but looking like we will have a split Congress. Democrats controlling the House, Republicans controlling the Senate. We'll wait and see what happens in Georgia, but very likely there. So a split Congress has been the perfect setup for stock market. Just looking back at history, you can see that here, 17.2% per year on average when we have a split Congress. And again, that's just keeping checks on everything, right? Gridlock is good. That's what Julia was mentioning. Keeps things closer to the middle. Nobody can come in and just change everything. So that's a positive, and the markets have reacted to that. And it takes a lot out of Biden's most ambitious policy, prospects that he had been talking about. So that increasing taxes, pretty unlikely now. More regulation on companies, less likely. So again, good things for the stock market. Now, if this does hold true with a split Congress, there are some certain areas that we're looking at that could be poised to do very well with that. So we'll just mention a couple of them here. Financials, less regulation, less taxes, they could do very well. Healthcare, the healthcare sector, unlikely to have a major reform there. So that could be good for the current system. Big technology, we already know it's had a great year this year. It could be poised to do very well going forward. Less regulation, less antitrust laws. So that could be a good sector. And then emerging markets is looking like it could be really, really good. Biden may reduce or eliminate some of those tariffs that we've seen, and that could be good for some of these international companies as well. So again, a lot of promising things. We'll see what happens here. And I want to mention that all of our investments capture all these different sectors. Right? We don't try to focus in on these different areas. We capture it all, widely held, very safe. And that way, whatever sectors do perform well, you're going to capitalize on some of that growth. So you're all set up very well for that. All right. And the last thing I want to mention here, and this is again looking back at history, but non-election years. So these would be no midterm, no presidential election. Again, have been the best for the stock market, averaging 14.3% per year. So well above the overall stock market average of right at 10%. So 2021 would fall into that category. Another reason why we're fairly bullish going forward. And so again, bottom line is we're not out of the woods. There's still some concerns, a lot of concerns. You know, you want to make sure that your family and you're staying healthy, but there's some good positives that are coming as well. Vaccine news, you know, better earnings than we expected, split Congress and what that does for the whole economy. So yeah, that's kind of where we sit. And again, stay in the market. Don't try to time things. We're all going to be okay.
Yeah, excellent. Thank you, DJ. So to recap what DJ said, this is a strong economy heading into 2021. And you know, I just want to pause and take us all back to March. And would we think in March that we were going to see new, you know, highs in these markets in 2020? You know, most likely no. And so we've come a long way. And now with this vaccine potential, I think that really came and gave us a jolt of confidence and hope. And I believe we have started this new bull market after, you know, looking back in history, will be most likely the shortest recession on record. So there's a lot of good things, you know, pointing to a strong 2021. And, you know, to talk a little bit more about that vaccine, you know, as hopeful as this is, and as I think they said 90% effective versus the FDA goal of 50%, you know, this could be a real game changer. But it will take time for that distribution. And so most likely, you know, distribution of that won't come in until some of it quickly, yes, but for the masses to mid to late 2021. I was encouraged to see where the CEO of Pfizer said that he would take it himself, which that's a good sign. But currently there are 150 million flu vaccines that happen each year. And we would need 4 times that amount because it's 2 doses per person. So this is an extraordinary task. No doubt that it can be done, but it is going to take some time. It reminds me of the race to the vaccine. It reminds me of the 4-minute mile, right? So once someone ran that 4-minute mile, then it opened the world for others that it can be done. So I think this is that jolt of confidence, like, all right, there's a light out there and we're going to get to the other side. But between now and then, volatility is here to stay. And as we've seen it looking back, and those that have stayed the course and committed to your long-term plans and committed with, you know, staying with those financial plans are the ones that will come out victorious on the other side. And so it's as we go over this, it's really crucial. Yes, we want to understand what's happening day to day, but it's important to step back and take the big picture in. So thank you, DJ. And if you have any questions on market updates, you know, please again, put them in the Q&A or chat and we'll get to those here at the end. Okay, so let's transition over to taxes. So like DJ referred to, most likely tax rates will not be changing in the next couple years, at least the next 2 years at the very least. And so we will most likely be staying with the 2020 rates for 2021 and beyond. So that gives us 7 tax brackets, starting at 10% and 12%, and then going all the way up to the top bracket at 37%. And I also, one of the things I talked about on our last webinar was that the capital gains rate was a rate that looked to be increasing potentially. And we see that kind of staying status quo, which currently, if you're in the 10 or 12% tax bracket, your capital gains rate is 0. And then from the 22% to the 35% is 15% federal capital gains rate. And then if you're over that 37% bracket, then it would jump to 20%. So we see those consistent, and that will, as I go through kind of some year-end planning here, that'll allow you then now to make decisions on capital gain and loss harvesting as we head into the end of the year. The standard deductions then, again, will stay, these are the current levels for 2020, and then there'll be about a $300 increase for 2021. And again, as we look for the year-end planning for itemized deductions, it's important to understand, do you take the standard deduction or do you itemize? And potentially year to year, you could change. And so in the old rules, when more of us itemized deductions, it was always to accelerate those deductions. But under this new rule of a bigger standard deduction, it's really to time those. So if you're going to itemize in one year and take a standard in the next, then there could be some things, if 2020 was a year that you itemize, there's some things that we can take advantage in this year that you should be mindful of. Here's the other thing that I've seen that's really encouraging for retirement and your 401k plans and 403b plans is keep funding those. So clients that we've seen that have funded their IRAs and their retirement investment accounts through 2020, man, have they made a really good return, because when you regularly fund them on months like March and April and May, when the markets were down so much, it's like you bought things at half price. And now we're back up to highs. So you can see the values go up. And so no matter what the market's doing, if you're in that accumulation mode and saving for retirement, keep funding those retirement. It really works. And then I would say on the flip side of that, for our retirees, what we've seen is retirees, because they're not traveling and they're not doing all the things that they normally would be doing, they're saving money. And so they're not having to take so much out of their retirement accounts, which leaves more in the investments that then has allowed those benefits to happen for them as well. And then also, as we get closer to the end of this year, remember that you have until April 15th of 2021 to make those IRA contributions. So if you stopped, I would encourage you, if you can, to restart those, but then you'll have up until April 15th to get that done. And then also the IRS just gave us the defined contribution plan limits for 2021. As you can see, most of it is unchanged, except the defined contribution maximum limit for employee and employer contributions. That was up 1,000. So that you'll see that there. Okay, so let's head into what do we do here for the year end? Well, this is a very common time to think about giving to charities and to nonprofits that you love and care about. And as a reminder, I know I talked about this last time, but it's a good strategy if you have an appreciated asset. So it could be a stock, it could be real estate, something that you have a capital gain in. You can actually donate that asset instead of the cash to your nonprofit, and then they sell it within the nonprofit, which allows that then to be a tax-free realization for the nonprofit and a deduction for you making that contribution. Also, the 2020 gift, the annual gift tax exclusion is $15,000 per year per person. So that means all of us can give $15,000 to someone else without a gift tax return being filed. So if you have built your wealth, and a strategy could be that you're giving that as gifts around the holiday time to loved ones, this is the limit. So if it's a married filing jointly or a married couple, then they could each give $15,000 to one person without that gift tax return need there. And then also for 2020 and the CARES Act that was passed shortly after March there, it allows for charitable contributions of cash up to 100% of your adjusted gross income for 2020. So this is something special for this year. And so again, if you needed more deductions or have a big gain event, you know, that could really help for this 2020. Let's see. So I have a question here. I'm going to pause. So what is a gift tax? So great question. So a gift tax is, so we each as Americans have a limit of how much that we can gift to others. And that limit per person is both good for when we're living and when we're dead. And so currently it's a little over 11 million per person. And so 11 million, you can either, it typically happens at death. So you leave to the next generation. And so, but when you're living, you can only do 15,000 a year. So if you go over that 15,000 a year, then you have to file a gift tax return. No taxes are due, but it just says, hey, IRS, I gifted 100,000 to this person, and that 100,000 then comes off of your $11 million exemption. So I just want to make sure. Does that make sense, DJ? Did I explain that right?
Right. Yeah. Kind of like it gets added at the end when you pass away to your estate.
Yeah. So it's just like a tally you have going within the IRS. That's very true. Yes. Great question. All right, so let's keep going here. And then also here to stay is the charitable or the qualified charitable distributions. So if you are over 70 and a half and you have an IRA, then this pertains to you. So you are allowed to take up to 100,000 out of your IRA and give that to your nonprofit or charitable organization of your choice. And so to do this, it counts as your required minimum distribution. So now under the required minimum distribution doesn't come in until 72 now, which is the age that you have to start taking money out of your IRAs. But this is a way that you can take the money, qualify, you know, or satisfy that distribution, but also keep that off of your tax return. So it goes directly from your IRA to the nonprofit. So a great way to give, a great way to save in taxes, and it's just an overall win-win. And also in 2020, I'll note that required minimum distributions were waived this year. And so this brings up another opportunity to look at between now and year end. If you have not been taking money out of your IRA, you could consider a Roth conversion. And this is where you take money from your traditional IRA, 401k, retirement account, and you shift them over into your Roth. And so when you do that, it's a taxable event. You have to pay taxes on the conversion. But once it moves over to the Roth, it can grow tax-free and you don't have to take the required minimum distributions from the Roth. So it could be very beneficial. It's really critical to look at how this personally affects your situation. So if this is something you're interested in, what I would recommend is that you reach out to us and we will be able to do a projection of how it would be beneficial for you or not. It's almost always important that you pay for the taxes on the conversion with money that's not from your IRA. So you have to have the liquidity to be able to do that. But if you're in a lower tax bracket and in the future you'll be in a higher bracket, which may be all of us, then those Roth conversions could be a really good thing to consider in 2020. And then the other thing to consider, now that we kind of know that capital gains are going to be stable in 2021, then I think it's pretty safe to do some capital gain or loss harvesting. So what we mean by that is this is only applicable to accounts outside of your retirement account. So if you only have retirement accounts, then don't listen. You can stand up and take a pause or a stretch break. But this is for non-retirement assets. So if it's maybe it's a stock or a mutual fund, if you have one mutual fund that has a gain and another mutual fund that has a loss, then you could sell both of those, kind of harvest the gain against the loss. So you essentially wouldn't have taxes due, but you've harvested that, and then you can reinvest that in. You have to be careful. You can't do the same investments right away because of the 30-day wash rule, but we can help you with that. But it's a good time to look at your non-retirement assets to see if there's possibilities to take advantage of realizing gains or losses there. And then lastly, have a proactive plan for your taxes. So if you've heard our webinars, we're big on this. We believe that you can have a proactive plan to pay less taxes, and understanding your options is critical. So that's something that we can help you with, is review your situation and help you save money on taxes.
And Julia, we just had another question about when do you have to do 2020 conversions, by the end of the year or up until April? By the end of the year.
By the end of the year.
Yep, it's got to happen before then.
Great question.
All these rules, all these different
IRS rules.
There are.
Okay, so some next steps here. So again, we are happy to help you create your strategy. In personal finance, it's a lot more personal than finance. And so allowing us to help you with all of our services to really figure out how do we design the right path for you. And if you are interested in that, so whether you're a client or you are a guest today, if you want to schedule a complimentary consultation to go over anything that we've talked about, you can text the word FUN to the number 33777, and that'll just prompt you to give us your name and email, and then we will reach out to you to schedule an appointment with one of our wealth advisors, and we'll make sure to kind of dive into the details of how does all of this affect you personally. So we would be honored to do that. And a lot of the questions, it's just hard to give the advice to the masses, where when you can really own it for your own situation, it's just really the key to saving on taxes, building your strong financial future, and retiring successfully. All right, so just to end this, and then we'll go into questions. So we are doing business with us. We are a partner of LPL Financial. So LPL is Linsco Private Ledger. They are the largest independent broker dealer. They are SIPC. They're a member of SIPC, which is important. And all of our advisors at LPL are licensed and registered, and our registrations are held with LPL Financial. And there's some important disclosures. And then I will start reading some questions here. So are the appointments by Zoom or in person? Most likely they are via Zoom. We're still trying to just facilitate business that way, unless it's really essential that you're in our offices, which sometimes it is the case that way. So, but most likely they will be held via Zoom.
And we're all missing the face-to-faces so much. Can't wait to get back to see you all.
Yes. And okay, another question here, or maybe it's a comment. Dow 30,000 by the end of the year or by the end of the month?
All right, Julia, what is it?
Yikes,
I
that's
wish
a
we
long
had the
way.
crystal ball. I wish we did.
Yeah, I would just depend on, I think it's depend, maybe that's like, I'm not sure. I know this person who said that, so I'm not exactly sure where, if they're joking or not. I think they're joking, but I think it depends on vaccine. Like, how do we continue to move forward, and do we keep seeing, every day more positive things coming out on that? And then also, I think the stimulus package. So the next stimulus package it's good for stocks in the short term, and it's the bridge that a lot of Americans need to get to the other side of this pandemic. And so, but I also think if we're closer in a vaccine, then my guess is the smaller the stimulus, because we're we can see the light there. Yeah.
Yep. And, we're in, like you mentioned, Julia, we're in a heightened state of volatility. We've seen that all year. So positive and negative news can make things move, quickly in the short term.
Yeah. Okay, another question. Are you able to comment on the expectations for Oregon real estate sales now through the spring? Ooh, so here's my take on real estate. Typically, in inflationary periods, which we're not in now, but the Fed has pretty much said we're not raising rates moving forward. We're keeping them low, which creates inflation. I mean, I don't know about you, but think about everything that you buy. Where are the prices at between now and a year or 2 years ago? My husband is in construction, and I mean, supplies have increased so much. I think I want to say at least 20%. And it could be that just the supply is not there and the demand is. I think a lot of people are doing kind of COVID projects and investing in their homes. But I got off track there. So, but real estate prices, most likely in inflationary periods, real assets, real estate stocks do well. And so I would imagine, I don't know if that's going to show up by spring, but I would say over the coming years, that should bode well for real estate. Any thoughts, DJ, on real estate?
Well, I know that the typical real estate cycle is about twice as long as the stock market. So, we're in a 11 year from that, where we're really low with real estate. So it probably has a lot more room to go.
Good. Excellent point. Okay, again, if you have any questions, you can put those in the Q&A or the chat box. But if we don't have any questions here, I think we'll look to wrap up. Thank you for attending. We will be back in December to do another webinar the second Wednesday of December. So look out for the details there. And as always, we're here to support and serve you. So if there's anything that we can do, please reach out, and we would be delighted. Any last thoughts, DJ?
No, thanks for joining us. I hope you all have a great rest of the year.
All right. Bye, everyone.
Bye.